Hello and welcome. I'm Bob Currie, contributing editor at The Future of Finance, and my guest today is Richard G. Brown, Chief Technology and Project Officer at R3. Richard, how are you, sir?
I'm really good. Thanks for having me, Bob. Good to see you.
Great to catch up with you, and thanks for the chance to talk over some of the developments in R3's business. It's a timely opportunity. R3 celebrates its 10th birthday this year. I remember you describing alongside Ethereum, Corda, your platform, as being one of the OGs, the original gangsters in the public and private programmable blockchain world. Let's just get our teeth into the origins a little bit and look a little bit at the 10-year period and what we've achieved over that time. I mean, Richard, just to get the ball rolling, could you share your perspective on the drivers for Corda's design, how you put that together, and how that's evolved over the 10 years that we've seen subsequently?
Yeah, sure. I mean, you're right to look back 10 years because where are we now? Recording this in 2025, and the year 2015, so 10 years ago, was exactly as you say. It was kind of seminal. It was the year the Ethereum network went live, and it was the year that the first line of code on Corda was written. So there's a question. Well, why did we write the code? Why didn't we just go live with all our customers and members on Ethereum back then? And the answer is there was this huge opportunity but also a problem. So the opportunity was, it felt like the entire financial world was looking at what was happening in what we now call the public blockchain space, Bitcoin, and then its derivatives, and then Ethereum came onto the scene. And there was this like insane sort of excitement and optimism, which I think still exists, which was, here is a new way of building market level systems. It was never described that way. That isn't what the people building those platforms were doing. But from the financial services perspective and from the technology perspective, as we looked at it, we thought, we've now got these networks that exist and operate at the level of the entire world. Entire economies are running or will run on these platforms. And they have this property that everyone who wants to transact is able to connect to the same open neutral network. They're confident that what they see is what their counterpart sees. There's no doubt about what the current and most accurate version of the data is. And it's a completely different way of building systems as opposed to what we have today, or what we had back then, which was individual firms with their own IT stacks that were always out of sync and never fully integrated. And so there was like this huge optimism and ambition, but at the same time there were just hard-headed, unavoidable reasons why we couldn't directly adopt those platforms as they existed then. One, they were brand new, so they were unproven, they were untested, they used languages that, programming languages that not most people were not familiar with. But they also had real technological shortcomings back then that meant they couldn't be used. I mean, people forget now, but they didn't have transaction finality. There was the possibility that a transaction could become undone after you thought it was done. Try explaining that to a senior banker. These networks had no privacy story, and there was clearly a lot of regulatory and almost like regulatory and legal risk that people perceived around them. And so I guess, and this is kind of like the stepping off point for Corda. We as R3, and we'd assembled a huge consortium back then of banks who were really keen to explore and exploit this space. We kind of had a choice. One was, well, we just sit back and do nothing and just wait for that technology to be ready, or alternatively, we say, well, the underlying inspiration, this idea of like market level applications, market level infrastructure, market level networks that multiple firms can use. That principle, that idea is that genie's now out of the bottle. So can we build something quickly and rapidly that the industry can use that doesn't have the shortcomings that existed back then? And that, if you like, was the genesis of Corda. Fast forwarding 10 years later, I think it's been a huge success. It hasn't achieved everything I'd like it to have achieved yet. There's more to do. But we have multiple live networks, dozens and dozens of them, millions of transactions a day being processed, billions of dollars of assets are issued, but there's still more to do. But yeah, looking back 10 years, I don't think anyone thought we'd get this far.
It's an interesting question, Richard. I mean, if we look at the ambitions that maybe you set yourself 10 years ago, I mean, how far have you ticked those off?
I think we've achieved all, but we've achieved many, but not all of them. So have we as an industry, do we as an industry now have market level platforms, market level applications that are optimizing how entire sort of aspects of the financial services industry work? Yes, we look at what Euroclear and SDX have achieved on the primary issuance and secondary trading side. We look at what HQLAX have achieved. We look at how the efficiency of the Italian banking system has been transformed with their sponsor project. Everywhere I look, I can see really real signs of and sort of real achievements. But, and there is a but, there are some things that played out differently to what I anticipated or expected. And one of them turned out to be, and is very important, which is, if you look at the public networks, let's just take Ethereum as an example, as as the OG, as you put it. There's one large open Ethereum network. It has issues, performance scaling. We know all the criticism it's coming for recently, but it's one large network that is neutral. It's open. That you don't need permission to use it. And then on top of that, there are multiple hundreds, thousands, tens of thousands of different applications that are all deployed by different parties who don't necessarily know each other, that can interoperate and compose. So you have this, if you like, this shared substrate, and then lots of different users on top. That isn't, it turns out, how the private, the permissioned blockchain industry played out. The path our customers took was to build separate networks for each of their applications. So I threw out some names earlier that we may get into later, but Euroclear, SDX, HQLAX, Spunter, the Corda projects I've talked about, they're each running their own networks. So that's for good reason, because it gave these are in regulated sectors. The operators of these networks need to be sure who's on their network. They need to be able to convince the regulator and the lawyers who are writing the opinions that this is well run and it works in a certain way. And so that need for control and being able to demonstrate they've done it correctly is super important. But what it does mean is that rather than having one large Corda network that everybody shares, there's a separate network for each network, for each application. So that's allowed them to accelerate. I think it explains in some way why we've achieved so much in the private space and the permission space, because these networks have been able to run at their own speed without having to sort of wait for everybody to catch up. But it does mean we now have like the next challenge, which is how do we bring them all together? How do we allow them to connect to each other? How to interoperate, and how to connect and interoperate with other networks as well. So I think we've achieved a lot of the vision, but because of that fork in the road we took around separate networks for each application, it means there's another step we have to take to really unleash this opportunity.
You've certainly achieved. I mean, sitting on Corda's permission networks now, you've got something like sort of 10 billion US dollars of real world assets, which is sort of tangible growth over that 10-year period. But I mean, obviously these RWA levels are minuscule compared with assets issued and held in TradFi ecosystems. So what are the next steps forward really in unlocking that growth and attracting the next wave of customers? So how do you kick forward from here?
Yeah, I mean, I like your framing there, because I guess success or relative success is always is always by reference to something else. And so, as you say, I'm really proud of what we've achieved in the Corda ecosystem with, as you say, 1 million transactions a day, $10 billion of issued assets. So these assets, they exist and are represented on these Corda platforms, and that compared to what is available on the public chains, leaving aside stable coins that we'll come back to. So just real world assets, bonds, security, bonds, equities, whatever they may be. That 10 billion on the Corda networks is actually, with the exception of maybe one other network, it dwarfs what's been achieved on the DeFi side. And I've got some views about why that's the case. But if I then look at TradFi, look at the traditional finance side, of course it's trivial, it's a rounding error. 10 billion is it's a thousandth of 10 trillion, and 10 trillion isn't even a large number compared to what some of these platforms achieve. And so we've barely scratched the surface on the TradFi side. But if we look at where the world is going towards more open networks and more public networks, 10 billion is actually right out in front. You look at if you look at, then there's a website called rwa.xyz, rwa.xyz for our American friends, and it shows you the real world assets that are calculated to be deployed across these public networks. And then you layer on the Corda values that we got from our customers, because our networks are private, and it towers over them. So the question I was asking myself was, well, how was that achieved? And I think the answer was back to the point I made earlier that our customers, they didn't wait for those networks to be ready. They said, well, let's just start the work anyway. We have to integrate with our existing systems. We have to build a business around it, a new business model for how securities are issued or traded or whatever it might be. We need to get the legal opinions. We need to get the regulatory approvals. All those things are required, irrespective of the technology you're deploying on. And with the Corda ecosystem, that work is done, and hence these assets have been either originated or bridged onto Corda. But that's not enough. We have to go further. So if I then zoom out and look at one of the other big trends, you could almost argue that what we've achieved or what we're achieving on the private side is we're solving the supply problem. We're helping customers take these assets that are either brand new or existing legacy systems and extract them and move them onto a modern sort of like modern market level platform, in this case Corda. But the new source of demand is on the public networks. You look at the crypto investors, whether it's institutional or retail, there is a hunger for high quality investable assets. It started with just regular crypto native tokens, regular native tokens, then it's stable coins, yielding coins, and I guess the big bet and certainly the big trend is the growth of demand for real world assets, real assets, and that's exactly what the supply is on this side. So it kind of feels like there's almost like a grand bargain or a win-win to be achieved by bringing these two worlds together: the supply from the traditional finance sector meeting the demand on the DeFi side.
Do you see opportunities to push convergence of permissioned and permissionless together, Richard? Do you see these, the Ethereum side and Corda side converging more now, 10 years on from the foundation of the two networks?
I think so, because I think we've kind of, if you like, we've kind of realized what each other's relative strengths are from a technical and maybe perhaps legal perspective. But we're also discovering, and we've discovered where the real product market fit is. So if I look at our relative strengths on the private side, on the permission side, we've really nailed the regulatory aspect. We've really nailed the integration and the complex workflows. How to extract assets from existing systems, how to model the life cycle and all the post trade activities. That it almost like that once in a generation modernization of the financial markets. That's really what we're driving on the permission side, and on the public side. What we're seeing and what's being confirmed is they've solved their technical issues. Say around transaction finality. They've got increasingly credible privacy solutions, and with the changes in governments in certain countries and regulatory changes of heart, the legal reasons or the regulatory reasons why financial institutions couldn't go anywhere near it are beginning to dissolve away. And so the thing that those networks are offering, which is this neutral, open, if you like, just this shared network that's now accessible to banks. And on the permission side, we've got the thing they need, which is the source of high quality assets. There's also one other thing, which is in terms of where is the product market fit, and there are two very, very sort of like attractive examples of it on the public side. The first is the most recent one, which is we just see the runaway success of stable coins, which has then created the interest in yielding coins, and I think will lead to the interest in real world assets. So that sort of I guess like underpins what we talked about. But there's also the thing that's long been talked about on the permission side, but which is already fully achieved on the public side, which is this true composability story. This idea that different pieces of business logic can be deployed and interoperate and can connect to each other. That was really proven with the rise of DeFi a few years back, and it could be the thing that unlocks growth for the permission side as well. So net, I think we each now know what our relative strengths are, and therefore we can come together from a position of mutual respect.
We've seen live trades that demonstrate that public and permission chains can connect together. I mean, you alluded to HQLAX earlier, and I mean HQLAX and Finality had a proof of concept, if you like, had a live test that showed that permission Corda networks, on the HQLAX side can connect and interoperate with enterprise Ethereum, utilized by Finality, thereby supporting atomic settlement across two distinct networks. But a proof of concept's really quite a long way from industry adoption and generating scale. So I suppose my question to you, Richard, is, what can we learn from this initiative, and how do we go about building scale from there?
Yeah, so maybe if I take a step back and just like build on your point about those two networks. So So HQLAX, the high quality liquid asset exchange, is one of the preeminent Corda networks. And my sort of naive mental model of it is, this is a platform that banks and big regulated institutions can use to record and to manage baskets of government bonds, so really high quality assets that they can use to trade amongst themselves, and they can do it intraday instantly. So it allows them really to optimize their balance sheets at a real micro level by exchanging these baskets and bundles of assets with each other in real time. Something that you couldn't do with the sort of like the 2-day or 3-day settlement cycles of existing custodians and CSDs. So that's like it's really powerful on its own merits, and it's growing really well. But notice what I said. I talked about exchanging baskets of assets. So maybe some French government bonds here and some German government bonds, and two banks can swap them. But most trading, the vast majority of trading, of course, is buying and selling things for cash. So you're not doing you're not bartering. You're exchanging. You're selling one thing and buying something else. Now, for the reason I described earlier, most of these permission networks have developed separately. So HQLAX is optimized for the management and tracking of the assets it has. The growing and perhaps sort of like preeminent permissioned cash network is this network you mentioned called Finality, Fnality, built on a different technology, a variant of enterprise Ethereum. And what they offer is, in effect, synthetic central bank digital currency. They've got an account at the Bank of England, and then they issue claims against their holdings. So it's as good as you can, it's as close as you can get to central bank money in digital form without it actually being a CBDC. So it kind of feels perfect. We've got a modern asset sort of trading platform in the form of HQLX. We've got a modern and like super impressive cash network in the form of Finality. Why can't we, if I'm a customer of both, I can use cash here to buy something here and sell here and pay for it there and so forth. But that requires interoperability. And the great news is those platforms, those networks with their tech providers solve that problem directly. They show that it is possible to align the rule books, because obviously there's legal underpinnings to this. You've got to get you've got to get a settlement finality opinion from the lawyers and all that kind of stuff. They demonstrated it could be done, and then technically it worked. We at R3 and our partners at Hara and a few others said, let's take some of this work and see if we can generalize it. And we contributed that to the Linux Foundation as the Harmonia project. And so that, I think, it points the way to a very credible way of driving interoperability between these networks. But it does start from, I guess, an assumption that these networks are separate. But the point I made earlier was this idea or this assumption that the networks are separate, they're only that way because of just how we got here historically, because of the need for each of these networks to develop at their own speed and because of regulatory concern. But when I bring in the point I made earlier about how people are now getting far more comfortable with the public networks, and both from a technical and business and legal perspective, where I think we'll end up going is saying, you know what, rather than each of these networks bilaterally negotiating and figuring out how to connect to each other, which has its place, I think very quickly we're going to move to a model where instead these networks almost alight and sort of like they coincide, or they rendezvous by sharing the same underlying layer one, the same underlying public network. So rather than being separate from a completely separate from a technical perspective, they're separate from a rule book and and technical implementation, but their consensus, the place where transactions are finalized, all happens in one place, on a layer one, on a public network, layer one as they call it, which I think could radically simplify the interoperability challenge, but something we couldn't even contemplate 2 years ago. The stars hadn't aligned from a technical, commercial, or legal perspective.
Will that provide a trigger, Richard? I mean, I suppose, as an observer, we perhaps have been stuck in something of a chicken and egg where, we're waiting for network effects, some sort of driver or trigger just to kick things forward and to really genuinely drive expansion to scale. The case study you referred to earlier, was excellent in supporting collateral transformation and delivery versus delivery. And certainly the example with Finality illustrates that we can support delivery versus payment, the growth of repo-based transactions and such like. But what we're really sort of waiting for is some sort of kick forward, some sort of really genuine trigger that drives sort of expansion to scale. Are we there now, do you think?
I don't think we're there yet, but I think we have a good idea, or perhaps a very good idea of what the next trigger can or will be. And I think it derives from that concept I was describing around bringing the supply and the demand sides together. because if we look at what the permission networks have achieved is, predominantly, as I was saying, that the supply of networks, supply of assets can be used for things like, intraday settlement, in the example I just gave. But sitting out on the public side is this hunger for high quality assets. There's a real pull there. Investors, institutional in particular, but also some retail, want high quality tokenized assets that they can invest in with, with assured returns or with higher risk, but with high potential of return. Just what you'd expect from investors who are seeking a return. And so the bringing those two things together specifically, and I guess if I get into the details, specifically by allowing these Corda networks, these permission networks, directly to connect to a layer one, use that layer one as its consensus layer, if you say, allows us almost to graft one network onto the other. And then once we've done that, we can, if you like, lock the asset on one side, bridge it through, and suddenly the supply on one side, we almost build this teleport, if you like, that allows the asset to flow straight through to where the demand is on the other. So it's yes, I think that, and then of course that then works both ways, because there's more demand that creates, that creates its own supply, and we see the growth on the permission side as well. So I guess there's more detail to get into there, but bringing those two worlds together, I think, could unlock, a surprising amount of growth for both sides.
Just to sort of pick up on the point that you've made there and your preceding point, a permission network will employ one rulebook essentially. A permissionless network will almost invariably apply a slightly different rulebook. I mean, how close are we to sort of making these work effectively together and delivering a common frame of reference when the two, at least traditionally, have been essentially optimized to do slightly different things?
Yeah, so I was thinking about this a lot, and actually in a completely different context, about this time last year. So a big project I worked on for R3 last year was the UK Regulated Liability Network project, the UK RLN, and it wasn't. I don't think it was an intent of this project to solve this rulebook problem, but the idea then was, how could commercial banks in the UK in this context, how could they tokenize deposits? How could they absorb a retail CBDC? There were all kinds of questions they were exploring, and it was very cleverly set up because it had a legal work stream, a business work stream, and a technical work stream, and I ran the latter, and the thing that it really taught me was that, because we spent a lot of time with the lawyers, was that the point of, just because the technology does something, that doesn't mean that it doesn't define legal reality. So how the rulebook defines things like, ownership or control, or in this case, finality, that's what the rulebook says. And if the rulebook chooses to reference, a particular system run by a particular entity, if everybody agrees, it's entirely at liberty to do that. So I raised that, in the abstract sense by looking at, just taking that, just take an arbitrary permissioned network. So it's got a whole bunch of assets issued to it. They're being transacted. Right now, the point of finality is determined by something in Corda we call the notary. Its job is to sign the transaction and say it is final. And typically that's operated by the network operator, and their rulebook, effectively their promise to their customers is, we're running this, and this technology that we run tells you, when it's done. But there's no reason it has to work that way. The rulebook, if it wanted to, could say the point of finality is when this smart contract, this contract running on this public network, when it says so. So provided we trust that that network is well run, that that transactions can't be reversed, it can't be hacked, whatever it is, then in a rulebook reference, in the rulebook on the permission side, referencing a contract on the public side that says, this is the point of when a transaction is done, that's entirely legitimate. Now, of course, I'll leave it to the lawyers to figure out how to paper that, but the idea that a permissioned regulated network with strong identity, lateral privacy, all the stuff that we've come to know in the Corda world, the idea that that network references an underlying public network for its point of finality, hence enabling interoperability with that network, that it's entirely feasible and entirely legitimate, and I think we'll see that happening.
Thanks, Richard. I'd like to just press you a bit more on the silo challenge. Certainly, I mean, looking at some of the case studies that we've looked at already, particularly alluding to the securities financing world, the long-standing challenge for securities finance and collateral managers is addressing fragmentation of collateral and liquidity prevailing in the TradFi world. How far is there a danger that we're replacing that fragmentation and silo-based liquidity and collateral pools with fragmented silo-based liquidity and collateral pools on permission blockchain networks. I mean, is there a danger? I mean, I can certainly see that in what we've seen so far, but are we moving beyond that now?
Um, So yeah, it's certainly a danger, and you could imagine the worst of all worlds, which is all the existing systems continue to run because we've not extracted everything from them, and then for each of them, we've perhaps built another a more modern tokenized system, and so you've gone from like N to 2N, and the fragmentation problem just goes just goes becomes insane. So as always, that's always a risk. However, again, I think this trend towards the connection of these permission networks to a smaller number of permissionless networks paints the future as well. So if we just zoom out and away from TradFi, look at how the DeFi ecosystem has played out. Until Ethereum hit its scaling limit, they had shown that it is possible to have a single network with everything deployed to it. So lots of different types of assets, composable smart contracts. That vision of a single world computer is entirely legitimate. It just happens that they couldn't the scaling issues they hit meant they had to then go down really complicated roll ups and layer twos, and then all this complexity and fragmentation came in through the back door. But of course, it doesn't have to be that way. There are much higher performance layer ones. Famously Solana. There are others, but these networks that have like far higher transaction throughputs. But even there, one still has to be very careful to make sure that what you put on that shared layer is just what you need to have. Don't bring all that complexity, unnecessary complexity from the TradFi side over to the new side, because you're repeating perhaps the mistakes or the complexity of the past, but you're also hastening the time where we hit scaling limits. So minimize the complexity that has to be put in one place, and then deploy to networks that can scale hugely. We see other examples of this. We see what the guys at Monad are doing. This idea of a single large network that can perform and scale, I think, does show that it is possible. Yeah.
So leave that complexity behind, keep that on the permission side, essentially, is what you're saying.
Yeah.
Yeah, yeah. Just looking at the growth of institutional business, and it's a question that grows from that, Richard. I mean, how comfortable are institutional investors and financial institutions more generally with working across layer one blockchain protocols? Are those layer one blockchain protocols reliable enough to place institutional business on?
Certainly some are, and of course I'm not here to try and influence or push traditional financial firms down that path. I'm kind of in fact doing the opposite, which is anticipating where I think they want to go. So my job is I've got product and technology in my job title, and on I guess in both sides, but in different ways. I have to anticipate where the world will be in a few years, because product development takes a long time. Technology has to run in parallel, and so I'm looking at what's already happening with first just look at the emergence of stable coins. First of all, regulated institutions would go nowhere near it. Tether couldn't get banked, and then we see the almost like the respectability of stable coins now, and the large numbers of regulated institutions almost falling over themselves to get involved there. And so it feels to me like that trend is one way, that for appropriate use cases, carefully controlled, there are situations where institutions not so much need to get comfortable with it. They're already asking themselves, how do we get closer to this? How do we exploit the opportunities? That doesn't mean that all existing regulated finance is going to move to a public chain. It wouldn't scale, but two, a huge amount of this still has really quite strong identity requirements, privacy requirements, complex interfirm workflow, all the stuff that the permission chains excel at. That's exactly what exactly what Corda is there for. But for the representation of assets to enable them to be used for whether it's in sort of loan pools or for staking, whatever it is, that is clearly something that institutions are. I'm not having to push them into that. I'm having to anticipate and be ready for when they demand it at high speed from us.
Probably a more honest question for me to answer as we look towards that sort of convergence towards public and permissioned is how much work is there still to do to deliver an institutional standard level of security and finality that financial institutions will continue to expect, because that's what they've grown up with in the TradFi world. I mean, how much more work do we need to do to make that sort of available to institutions working on blockchain?
I think, if I look at what but maybe just look at what I think I have to deliver and what, what my team has to deliver. I think that there's several stages to it. So one, the bet I'm making, or the anticipation I have, is that institutions who are currently deployed to standalone permission networks will want to connect at least some of them directly to public networks for to facilitate better, easier settlement of trades through delivery versus payment against high quality stablecoins, or to bridge assets directly. So I'm anticipating that's what they'll need, and therefore the first priority is get that built and make that available. And then the second question, which I guess is the one that you're raising, is okay, how do I then convince them that this is safe to use? So there's the testing, there's the security audit, there's the choice of the underlying network, make sure it's one that is is robust, respected, and can handle the load. And then the final one, which is I guess for the institutions themselves to answer, but it's back to the legal and the rulebook piece, which is what do they need to do to get their regulators and their their internal lawyers comfortable that this that this allows them to meet their obligations. And just one very very obvious example of that in in Europe is CSDR. There are some very specific regulations that pertain to central securities depositories around transaction finality, getting the right legal opinion that they can still conform to that regulation whilst using technology that is shared and not under their control. That will be a key step.
Thank you. Just touching on the point you made about sort of keeping the simplicity available in the DeFi world and not making that overcomplicated. I mean, in bringing real world assets to DeFi, how do we retain the simplicity and accessibility of permissionless chains while accommodating TradFi's complex life cycles, and risk protocols? There's quite a lot going on in the TradFi world with corporate actions and voting and a whole load of things that are generally sort of associated with the management over the life cycle of real world assets that presumably have to be managed in a blockchain network henceforward. I mean, what are the key technical advancements needing to make that vision real?
I wonder whether the key enhancement or the key step forward is a mindset shift. So there was a great blog post by the team at Ondo a few weeks back talking about their experiences of trying to model real world assets on public chains. And they'd gone down the path, and at least this is my interpretation of what they'd done. They'd gone down the path of trying to model all of the life cycle stages, all the corporate actions that might occur to various real world assets. And it's a talented team. They achieved it, but it was also quite complex. And reading between the lines, what I think they saw was, well, have we recreated some of the complexity of the past, and are we now writing it in two places? And so the path they're going down, I think, is to build a chain that is purpose built for that, and that might a public chain that might work for that. That might work, and we'll let it play out. My prediction is the right path, and this is just a prediction, there's space for everybody. My prediction is the better path is to try and keep these things separate. So to the largest extent possible, keep the corporate actions and the complexity of the assets on the permission side, whether it's in existing systems or modeled on platforms like Corda. And then the thing that bridges across is just what's needed to allow that asset to participate in the DeFi ecosystem. So can we describe it as in a standardized form, like an ERC20 token or whatever it is? Can we track the owner? Can we allow it to move around? But don't bring across all that complexity. And the reason why I say that could be also a viable approach is we can look at the way that the stablecoin market is evolving into the yield coin market. Stablecoins are extraordinarily simple, just a token, like who's the issuer, circle, what's the currency, dollar, how many units, and who owns it. And these things, because they're so simple, and because I guess the lawyers have structured them in just the right way, they can float around the DeFi ecosystem kind of without constraint. There's a lot of regulatory oversight on the way in and the way out, a lot of compliance. But when those assets flow around in the DeFi ecosystem, it's really unencumbered. Obviously, everything's visible, so it gets tracked, but it's unencumbered. But as soon as those assets get just one extra degree of complexity, in this case, they pay interest. They hence the yield aspect of a yield coin. The second they got that extra complexity, the whole weight, I think, of U.S. securities law rains down on them, and suddenly the firms who've tried to do this find themselves with these assets being sort of locked down. They can only go to whitelisted addresses and all the rest. And so then the question is, well, is there a way to integrate that to DeFi? And you've got the sort of the permissioned bit trying to coexist with the permissionless permissionless bit, and it's all a bit awkward. The solution they've come up with is to say, well, allow the asset to have the behaviors it needs to have, to allow it to function, calculate the interest, and so forth. But if you wanted to participate in the rest of DeFi, in effect, rapidly swap it for a stable coin that doesn't have those features, allow that to float around and then come back. And so I think that there's I think there's more thinking to be done here. But I think the general idea is keep these assets as absolutely as simple and as as standardized as possible on the permissionless side, and keep all the complexity on the permission side. I think there's probably a nice balance there.
Thank you. That's excellent. It's been fascinating to talk to you about your reflections on what we've seen over the 10 years of R3 and the 10 years of Corda. And it would be dishonest of me to ask you what this mix will look like 10 years on, because that's a long way in digital technology. But maybe I can push you to just share your thoughts on how you see the next 5 years looking. I mean, how do you see things sort of playing out in general terms over this 5 years? Engaging with some of the major themes that you've touched on today, convergence across chains, and some of the other themes that you've raised with our viewers.
I think maybe even just 10 months, 10 years back, 10 months forwards, I think we'll see two or three things. So I think we'll see, again, ever greater focus on from the permissioned platforms, Corda in particular, an ever greater focus on what makes them unique. So the identity layer, the permissioning, the pointwise privacy, and the interfirm workflow, all that, if you like, all that infrastructure needed to modernize and improve how markets operate on their own terms. So I think we'll see like great advancements there. And what we'll also see is these platforms, the vendors. So in this case, in your R3, you'll see us make it ever easier to connect these networks in the ways I described earlier. Connect these networks directly to one or more layer ones, so that if you're building on these platforms, you kind of get these permissioned platforms. You kind of get the best of both worlds. So you get an ever more capable platform for modeling your business logic and optimizing how your market works. And simply by just continuing to use that platform and waiting for upgrades, it will be possible to integrate it directly into one or more layer ones, so that you can then directly connect to stablecoins down there, or allow assets to be bridged. So I think we'll begin to see these worlds come together whilst becoming ever more differentiated.
That's excellent. I mean, some of our viewers will obviously be market participants that are positioning themselves and preparing themselves for this evolution. What takeaway messages can you offer to them in terms of how best to prepare for the evolutions that you've been talking about?
I guess a few things. One would be the permissioned blockchain networks, those that are already live and those that are coming. They're here to stay. They're solving like really quite difficult and important market problems. They're going to interoperate with each other ever better and with other networks, and they're going to grow. And so if you're not already on these networks, whether it's with all the ones I've described or even those of our competitors, they're growing and they are the future. So you need to figure out how you're going to integrate and connect to them. And then the second thing is, if you believe the trends I've been talking about in terms of technological maturity, regulatory clarity, and legal permissioning about public networks, your strategy has to include the possibility of perhaps even sort of leaning in quite heavily to the idea that you'll be integrating with those networks as well, either for settlement or because the assets you're originating have got a huge amount of demand over there. So it's really get on board with the existing and new permissioned networks, because they're going to grow quite significantly, and then be ready for the opportunities they unlock as they connect ever more deeply with the public side.
Richard, thank you so much for your thoughts. I'd love to talk for longer, but we're coming to a hard stop for reasons of time. But thank you so much for your insights. It was a great pleasure talking to you. Thanks as always to our viewers and listeners for tuning in, and I look forward to joining you again very soon. Goodbye, and thanks very much for tuning in today.
Thanks, Bob.